Good afternoon, everybody. Welcome to this afternoon's webinar. My name is Rhodri James. I'm the Chief Revenue Officer here at NorthRow, and I'm pleased to be able to welcome you to our panel discussion today around digitally transforming KYC remediation as we look forward into 2021. A little housekeeping before we start. We have the ability for you to ask questions today using the chat functionality in GoToWebinar. I'd ask if you wanted to ask any questions during today's webinar that you use that chat functionality. We have made some time at the end for us to go through some Q&A, and we will answer those questions then. There will be some polls using the GoToWebinar functionality that we will post between the panel questions today. We would welcome your interaction with those polls. It will help us guide the discussion, keep the topic relevant. This afternoon, we'll introduce our panel to you. We'll start our panel discussion around the trends in remediation and then head towards Q&A. I've introduced myself, so I'd like to just hand over to our panelists today, Andrew Brown, Nitish Kulkarni and Heather Robinson. Andrew, would you like to introduce yourself to our attendees?
Well, good afternoon, everybody. Thank you for joining us. My career really has been in two halves. The first half in law enforcement, where I specialise as a detective in banking and payment card crimes at the organised crime level. So worked a lot across different jurisdictions through Interpol and Europol, which gave me a particular view on the challenges for global companies, etc. And subsequently, in the last 17 years, I've worked in financial services in governance, risk and compliance roles, in particular being Chief Risk Officer for a global payments company. So most of the challenges that we're going to talk about today, I've been through more than once from different angles. Yeah, looking forward to it.
Thank you. Nitish.
Hi, good afternoon, everybody. Nitish Kulkarni. I'm part of the banking financial services practice for WNS. We've been financial services for the last close to 18 years now. So I had the chance to work with retail commercial banks, asset wealth managers, and investment banks. Really looking forward to the perspectives that we will share today. Looking forward to having these conversations. Thanks.
Thank you. Heather.
Hi, so my name is Heather Robinson, and I'm the Head of FS Operations for Konexo, which is a division of Evershed Sutherland. So I'm an experienced professional services consultant with extensive experience in customer and operations, conduct risk, compliance and financial crime, but in particular anti-money laundering. My recent experience includes working on large-scale operational projects for global financial services, mainly with a clear focus on customer due diligence and enhanced due diligence remediations. So these projects, we tend to include like design and development of the managed service solutions, really to create the effective and cost-efficient processes for regulator and customer satisfaction as an end result.
Awesome. Thank you, guys. Just to kick off today's panel discussion, I always think it's worth asking a more kind of general question so that we get our we align just in terms of what we're talking about. So as the first question, I'd like to get kind of your input on, why do clients start to assess the books of business that they have, and how do you define the difference between, periodic review and full-blown remediation projects? We'll start to look at the causes of those later, but perhaps Andrew, you could kick us off.
Yeah, I mean, there are a number of situations that can give rise to the requirement, external and internal. For example, external might be taking on either an existing book or a new book from a company that is as a result of a merger or acquisition, possibly a consequence of an audit, an external audit from a regulator or from a partner or something like that. And of course, the same issue could have come to light in an internal audit or review. And then regulatory changes, external regulatory changes can require it. So there are lots of different reasons. When I think of and that includes product changes as well for obvious reasons. When I think of the two, I think personally of periodic reviews as part of BAU, part of business as usual, we've got obligations to ensure that our insight into counterparties is current and is accurate, and we can't rely on that based on simply onboarding. That whole BAU process is usually aligned with risk categorization, so we review on a cycle in accordance with a risk-based approach. And separately from that, remediations I think of as projects. A remediation is the action of investigating the book and seeing the conditions, if you like, and that might be a consequence specifically of taking on that book through a merger or acquisition, or, as I've said, because of the insight from a audit or something. But it's definitely, in my mind, something I always think of as a project with a start and a finish. It's not part of BAU to remediate your entire book on an ongoing cycle. That's what I think of periodic reviews for, although they can be very different for different organisations.
Heather, is that the same in your experience?
Yeah, so generally, again, I completely agree that actually I think firms are required to do remediations, and it's something that happens regularly, and it's not something that I think people need to be worried or panicked of, which is often, you know, when we first speak to clients, they can be very concerned about how the remediation, where's it going to go and what we're going to lead. So I completely agree, which, you know, we're going to talk about a bit more, but actually internal or external factors influence why we have to do remediation. And actually periodic reviews is more of a managed service where actually you know this is coming up. It could be from a trigger event, it could be from just the 3 to 5 year, whatever it might be, cycle that requires your remediation, versus 3 to 5 years where you require your periodic review, which is what you expected, versus a remediation, which is actually a change to your normal process, which the periodic review isn't. So they can be very different. They can both be outsourced or managed as an operational process, but actually the approach to actually undertaking them is quite different. Yeah.
Nitish, when you work with your clients at WNS, do you see a difference between the two projects?
Well, I think, just to kind of look at this a bit more in a global manner. So I think there've been some unprecedented challenges in the market. We've got about 40% of all the transactions, payment transactions, outside of the traditional banks now, right? So that's one major trigger. You've got a scenario where possibly about over $1 trillion of financial crime and over $300 billion of activity around fines and things like that, and penalties have been paid. So there have been unprecedented times. We've got the regulator, which is in this case specifically the FCA, PRA, and other regulators in the geography, kind of taking a very close look at the market and requesting for some changes that need to be done on a quick basis. So we've seen scenarios where remediation activity has happened in batches. This has happened typically in cases where you need to kind of take a step back and look at all the onboards that have been done, customer onboards that have been done over the last, say, decade. That's scenario one. Then you've had scenario two, where any new client that gets updated on your books need to be going through a review process, again, typically once a year, but sometimes more as well. So it depends on what scenario you look at and depends on which part of the segment that you're addressing. But I would say that majority of the cases have been yearly review.
I would say, Rhodri, that one of the things that strikes me about the whole of the remediation area is that there are, in the case, for example, of banks in particular, because Nitish mentioned the split of the market now, 40% of payments being outside of traditional banks. The presumption that means anything is hard to guess at, because in reality, newer entrants may have already met standards because they are new, and those standards were in place when they onboarded. Traditional organisations that have long histories with clients, they may seem larger and more prepared, but they may have onboarded, our friends and family 50 years ago, and they're still active clients. And it's not necessarily the case that those books are being updated through the new processes. So the risk profile of entities, I don't think, is necessarily better or worse because of newness or oldness in the marketplace. In fact, there are specific pools which will have certain conditions. One other thing I'd like to mention now is that we're talking about a wide variety of reasons that, for remediation. And one that I don't think we mentioned quite specifically is that I think one of the things that will give rise to a requirement for remediation from an internal risk management perspective now is the recognition that as we go forward, and we have to automate. You have to automate in order to manage scale. You have to automate in order to meet the expectations of regulators, and you have to automate to reduce risk because it is less prone to a variety of risks, including human error. And what that means is you have to have books that can be automated. Even the way they are managed in the first place, even if it's in a manual fashion, that has to be sort of moved through a set of processes that can in turn be automated when automation of digitization becomes the way forward. So I think we'll see that as being a rationale for remediation projects in the near future as well, not just to get them up to speed in terms of requirements, but actually to prepare the data in such a way that it can be properly managed going forward.
I think one of the triggers that we've seen last year, perhaps it's still the case, is open banking and PSD2 regulation, which came in force. That was a massive change and shift in the industry, where traditional banks, a few of them, have had to share their client information across across platforms, and that's obviously been one of the key drivers for decoupling of the market, if you will, wherein payments, settlements, foreign exchange, lending activity is now moving away as well. That has also kind of opened up a Pandora box of cases that require remediation, and that's still underway. So it's probably going to go through first half of 2021 as well.
That reminds me of a good example of where regulation has become the driver as well, because of course in PSD2 with strong customer authentication requirements, those requirements could only be met if you had the kind of data that allowed you to reach out in the right way to your client. And I'm sure that many organizations struggled with that. I know a couple of the organizations that I've been advising had particular challenges around upgrading to meet the SCA standards. So just another example of what's happening at the moment and giving rise to it.
Yeah, excellent. Thank you, guys. Before we move on, we're going to try and get to know our audience a little better and go into our first poll question. So the audience should see a poll on screen right now, and we'd love to know how many of the people attending today's call have been actively involved in a remediation KYC project in the last 6 months, how many in the last year, how many in the last 3 years, or how many have not been involved in a KYC project at all. Just going to give you another 10 or 15 seconds to vote, and then we can close the poll, and that will inform us as we move forward with the way that we talk about the debate. Thank you. Just going to share those poll results quickly before we move on. So we can see from today's attendees, actually 50% of our audience have not been involved in a KYC project, but nearly 25% have been actively involved in the last 6 months. So hope you find the discussion today topical, and I know that our panelists will be keen to share their experience of the projects they've been involved in recently as we move forward. So just a little bit, my next question is really about the drivers of these projects. And, Heather, maybe the question to you, as you've been actively involved in some big projects recently, how does remediation become a critical undertaking in the organisations you've worked with, and what typical goals that your clients are looking to achieve?
So various internal, external factors really is how remediation projects come around. I must say I'm very surprised to see 50% of the audience never being involved in a remediation previously. I think actually they are very common, happens all the time. And as I said, it doesn't necessarily mean that somebody's in hot water because they're undergoing a remediation, which I think has previously been a common perception, but actually it's just the fact that our landscape, our particular regulatory landscape, is ever changing. So and I think that's one of the key things as to why or one of the common drivers behind a remediation, particularly what makes it a critical undertaking or critical remediation, is actually the regulatory landscape. So introduction of new or amended legislations and regulations actually tends to be the main driver behind why we're required to do this. So it's actually internally institutions generally need to up or change their standards or their methodology towards how a risk assessment has been undertaken. So external factors, I think, is the main one that makes something a critical undertaking. Noting back to what Andrew made a comment on previously around internal audit or product change or introductions of new products, again, also very key drivers to actually what requires a remediation, because ultimately, if you are not adhered to your policies and procedures, then ultimately you're not adhering to regulatory standards either. So obviously that's also very critical and important, but actually less so in terms of what makes something a critical or a large-scale remediation than actually an external driver. So basically, whether it's an internal or external driver that's actually led to the remediation, as a firm, you need to undertake an assessment as to what impact that has on your business, on your books, on your customer profile. So actually, what risk is being posed to your organisation and how has that changed? If it's a small risk, then actually you might decide that this is something we can undertake in-house. It might be something that you could draw out over a number of years, or it could be something that you could just pick up as part of your periodic reviews or trigger reviews. So as you go, you think, okay, now we also have changed the goalposts, and actually we need to require additional information as part of your ongoing review. That's quite a common factor that we see happening, especially for lower or medium risk clients. Actually, people often can do stuff internally as an ongoing basis, so it's not such an impact of a project. However, also very commonly, and this tends to be the kind of areas where you approach a firm like us to support, is where actually there's a regulatory or an external driver to the change, and it becomes a critical undertaking, or it impacts some of your high risk clients, and the risk posed to your business is actually too high. Generally, it's I would say resource implications are the main things that actually makes you go externally, and also helps drive what is a critical undertaking. So it might be a regulatory deadline. So by either whether you're under like a Section 166 or whether actually it's just new legislation that's being imposed, there's a regulatory deadline that your organisation must adhere to. And actually to get an operational remediation completed in time usually requires you to have dedicated resource, and the best way of doing that is to hire consultants, firms, contractors to do that. Always recommend, whether you come to us or somebody else, that actually people who actually do remediations do really understand operationally how to plan them properly. So actually you get understanding of say for customer due diligence, actually what's an appropriate outreach cycle? How do you go out to the customer to obtain the missing information? What technology can you use or can you rely on to actually get some of that electronically, so that you're not reliant on other people providing information back to you where possible, and also making sure that you achieve the right quality standards, everything's documented in an appropriate manner. So I think that's some of the reasons why you might go critical, and what the common drivers are. As I say, internal, external, but really regulatory changes from my experience.
Thank you, Heather. Nitish, do you have similar experience with your client base, or do you see other drivers causing the remediation projects?
Well, there are a mix of drivers. I think obviously regulation is a key driver, right? I mean, there have been incidences of financial crime, consumer finance protection, fair lending practices, and background screening activity, which has been, which is kind of quite strong out there. Number two, we've seen failings in the past with foreign exchange type companies, mortgage companies, payday lenders. That's been one of the key concern areas, and some retail banking activity as well. A mix of all of this comes into play in terms of costs and efficiencies that firms need to drive. At the same time, kind of manage the deadlines, which are quite tight. We've seen typically any audit findings that come up need to be kind of addressed in less than 6 months. So a mix of all of them, I would say.
Thank you. Andrew, as the ex-CRO on the panel, at what point in the stage of a remediation project does it become critical for you to talk to your peers on an exec team about the need to undertake these projects?
Well, it depends very much on the circumstances that gave rise to the requirement for remediation. Heather referred to taking on the book, etc. And fundamentally, what you want is insight for two specific reasons. Insight so that you can establish what your risks are in relation to that portfolio and manage them, and insight into the nature of that portfolio in terms of selling, in terms of your commercial imperative. Cost and value of those things are obviously both matter. For example, if you are in a position where you take on a business's book because you've acquired the business, that's usually done on the basis of the commercial opportunity. And despite diligence in terms of for the M&A itself, the reality is you don't get the insight you want before you open the package, unfortunately, a lot of the time. And so you've got a period of time then when I would say it is critical to really understand what you've just paid for, and perhaps even in some circumstances, before you start selling to it, as it were. So you've now got a new customer base, and before you want to start treating that customer base in the same way you would your existing base and cross-selling to them, etc., you might want to understand a bit more about what the risks are, what that particular client base is. There are all sorts of regulations around that, but just from the pure sort of commercial practice sense as well. And so the value of the book you've got depends on both the risks related to it, which of course could sink any firm. You don't know what you just bought, and that has happened before now, many times. And then you've got to also leverage what you just bought, and you can't do that if you don't have the insight. There's one other point that I think is important here in terms of the perspective of what is a critical undertaking. Critical for who? I know I've spoken to Heather and Nitish about this before. Critical, of course, for the organisation might be different than critical for the accountable senior manager. So if you are the senior manager with the relevant SM function, you've taken on this huge portfolio. It's all very well for the business to think that in the context of perhaps a whole other range of risks, this isn't where they want to immediately put resources, but you can't preside over a book about which you don't have appropriate insight. So the regulators are sensitive to that challenge, and they will give you some time, but it's a diminishing period, as it were. So your excuse is fine on day one, and I would argue a year later, if you still don't have the insight into that portfolio, then you've got to find yourself personally accountable if it blows up in the business's face later. On the other hand, if in the early months you're making your representations to the board, you're seeking the remediation, you're explaining why, and you start to attack it, the fact that something then maybe blows up in 3 months after you've taken on the portfolio, if you can show you've made progress towards doing the right things, I think those will be will mitigate any censure from regulators or whatever. So you have that personal and that company level of critical undertaking, as it were, and the timelines can be different, but you obviously have to align those two.
Yeah, I think the drivers for the traditional banking and the new age fintech type digital banks, including the big techs, are slightly different. The focus on having operational resilience and system resilience has exploded over the last 3-5 years. And perhaps one of the reasons of that is obviously the regulation, and the recent Basel publication, which came a few months back, also kind of insists on having operational resilience at the back of fair practices for financial crime and things like that. But I think there has been a focus on kind of driving scalability via, of course, digitalization of some of the remediation process, and I think we should speak about that in the next few minutes.
Cool. Absolutely. Before we step into those, we have another poll for our audience. So launched on your screen today, we'd like to understand what you think the key challenge your firm faces when remediating existing clients. With a multi-choice option here, you can see them on screen, and we'd love to get your thoughts. Okay, we just have a couple more seconds for people to answer the poll. And if I publish these results, so interestingly here, that over 50% of people have the biggest challenges asking clients for more information, as well as, you know, a quarter of people find it difficult to access that information. We'll talk about resourcing and complexity of systems perhaps on the next question, but really interesting that 50% of you think that your biggest challenge is asking clients for more information in the relationship. So coming on from that, and again, I think this is a question we have some practitioners on the call with us. So when you look at your recent projects, perhaps you could give some examples of why those projects were successful, you know, what the lessons learned during those projects were, and which tools you were using from an organizational and technical perspective. And I know both Heather and Nitish, you have some really interesting examples. So Heather, if I could ask you to give an illustration first.
Yeah, do you know, interesting. I am very surprised by our last poll question, because Nitish, I don't know if you feel the same, but yeah, I would have said that asking clients for more information is actually one of the easier challenges that we face. So actually, you know, the customer outreach process, or even, you know, internal, it could be a relationship manager that you go to first, or it could be direct to the customer. Actually asking for the information is, I think, fairly straightforward. You know, we might come up with cycles that obviously fit the appetite of the business in terms of, do you write them letters, do you do phone calls, do you do a multiple effect? But actually, you know, the number of people we write out to, because of the technology we use, is much reduced, and actually a lot of information we can find electronically nowadays as well. So I find that very interesting that actually most, or half the people, and then followed by a quarter, all related their answers to the existing client information. From my experience, I always find that a lot of our clients believe they can do it in-house, believe they've got the resource, and then realise the challenge is way too big, and resourcing is a massive problem. But it's not just the number of bums on seats, but it's actually the skill set of those people. So you making sure that you've actually got people who are in the right operational mindset to actually understand how the operational process works, to be able to follow that, to be able to actually record information correctly, get the correct governance, etc., etc. So actually I find resourcing a big challenge, that's kind of a shared challenge with my clients. Challenges that I always have is actually related to the systems, which is one of the other answers, and the complexity of the systems is often an issue, but there is always a solution. So, you know, we often find you've got multiple different systems or legacy systems, and all that data has to feed into one central point for our analyst or our resource to be able to review that information to get a full view of the customer, the file, or the information you want to look at. So sometimes that can take a lot of hard work and effort and planning to get to that point. There's always a way of doing it, and ultimately what we try and do is make sure that's I don't know the word I'm looking for, but as non-manual, but as possible, because actually that's, you know, that's where we have the issues. And actually, you know, as I said, there's always a solution, even if it's a manual one, but actually that's what we always try and avoid. So yeah, so very interesting answer to those questions, which actually lead directly nicely into how to make it effective, efficient. Quality is always the key and the most thing that needs to be delivered on a project. If your quality is not there, then actually it doesn't matter if you delivered to the right timescales. Regulator make you redo it. Internally it won't mean anything, because actually you can't rely on what you've done. So quality is always fundamental to delivering these projects, and the output. So don't get me wrong, quality definitely has to be balanced with cost and with deadlines, but ultimately if we don't do it properly, then there was no point in us doing it at all. Governance is one of my other key big words. I've got block capitals to remind myself to put down. Governance is always key. So setting up a project, planning the project, understanding like the workflow that's available, the capacity of people, actually making sure that you're modelling on the assumptions. So for example, how long does it take to review a case? If we send out so many letters to so many customers, if that's your process, like how long do we think it would take to get them back in? What's the flow of getting them back in, to make sure that we're not, one, being like ineffective with cost by getting too many people at the wrong times, or two, not having enough people to actually be able to work the or you know, the information that's coming back in, and then you've got a backlog and you don't manage on time. So planning is key, coupled with your governance as well, because again, when it comes to your governance, if you haven't got your governance right, you won't be managing your risks, you won't be managing your costs, we won't be delivering to the same goal. And when a regulator, particularly I use regulators as a good example, says, can you justify why you did this? Or they do a sample and pick up one of your cases and say, well, this has X on file and this doesn't. If you don't have a correct change log or a risk log to say, well, this is actually why we made this decision and why this particular case looks this way, then actually, again, they're going to think you've got poor quality. So actually recording all your decisions, your changes, and your thought process is absolutely key. I touched on planning and operations already. Again, if we don't plan these properly, then it's not going to come out right. I think for a lot of my clients, I always say, I know that you're keen to get going, and most of the time they're like, let's start. But we often try and say, like, let's slow down. Let's get the planning right. Let's make sure the goals are aligned. Let's understand what the milestones are, and let's work to those instead of just getting started. Let's set those milestones and make sure that we're planning and working towards those together, so we understand what effort is required in what areas. And often we also recommend doing a pilot. So start slowly. So let's start with a small team. Let's test what we're putting down on paper as being right, and make sure it is really working. Make sure that we're happy that we have accurately pulled all that data, or we are checking the right sources against the right information. So planning, whether we do, pilot, quality, governance are my biggest success factors that I've got. Haven't forgotten that this is supposed to be a digital remediation, and we haven't touched upon digital lots. And one thing I've also put down is technology, because ultimately the future of remediation is, not to take away from what we're talking about later, but we do have to rely on our technology. Otherwise we won't be cost effective, we won't be cost efficient, and actually we won't also be able to review in the best possible way. So taking a really basic example, if it wasn't for the right technology, we wouldn't be able to do a correct review of kind of transaction analysis on a customer, for example. Lots of customers have multiple accounts, multiple lines of data. One person, even for one analyst, cannot absorb and see patterns in that information. So we do need technology to help us, whether it be, as I say, for transaction analysis or for screening, or even for a simple workflow tool. Technology is really important. As I say, that touches upon all aspects of the remediation as well, including things like the quality. Again, if we're sampling people to work for quality, again, it's much easier to have a tool that says, well, actually they've failed more cases, so let's check them more, making sure that we still adhere to our overall quality scores if we have tools and stuff to do it. So technology is also very key. So yeah, I would say if I had to do it in 4 words, governance, quality, planning and tech is the four things for delivering on time, on cost.
Nitish, perhaps you could give us some examples. I know WNS have been involved in some massive remediation projects recently. What made those projects successful, do you think?
Yeah, I think the first fundamental way of looking at this is, sustainable compliance. Right? It's almost similar to having the GAP, general accounting practice, policy and procedures that we've got. So it almost needs to be looked in that light. I think what's worked for WNS is setting up a remediation management office. That's typically what we do when clients come to us and they're looking for solutions around building this. Obviously, it's a mix of technology platforms and solutions that we bring to bear to domain knowledge. And this basically has got a SPOC. It's got a team of program management who understand the scope and severity of the problem and kind of leverage accelerators that we put in place. Again, as I said, it's a mix of platform, whether it's digital IDs, or fraud, or sanctions, or whatever that might be. We obviously leverage heavily on RegTech, which brings both data and technology together. So it's a mix of all of these.
Andrew, in your experience, how how do these projects become more efficient?
Well, I mentioned, and Heather picked up on it again, just that one of the drivers for remediation could be not a concern that your book is not compliant, but that it isn't structured in a way that will allow you to automate or digitize going forward. And if you're talking about that kind of wholesale change to systems, usually driven by success, then you may need to get this legacy data formatted in a way that allows you to take it forward in the way that Heather just described. But I'm going to go back to the poll now, and just on the going back to the personal perspective and having been responsible for this area rather than just being the consultant that comes in afterwards. I was not at all surprised by the poll results. So interestingly for me, that was my immediate thought, was that dealing with the customer would be the first challenge. The second was listed as accessing info being difficult. Well, just to deal with the second one first, that's what we were talking about. If the data you've got isn't actually available in a form that you can tackle, then that makes even a commitment to remediation challenging, even if you have all the things in place that Heather mentioned. So I can understand why people feel that's difficult. But I just want to put out there a little bit of empathy for our colleagues in-house, because I know why they put the reaching out to the customer as the most challenging. And it is because internally for them, there will be a huge amount of pressure from other stakeholders on the commercial, on the sales sides, account managers, whatever, who are always concerned when there is a touch point with the client that isn't in their direct control, isn't necessarily aligned with the sales strategies and the CRM cycles, etc., when it is effectively, and this is how they see it, coming from the challenging side of we want something from you instead of we're giving you something. And that will mean a lot of internal pressure. So I can understand why that is higher up on people's agendas than you might think, because it generates a lot of concern, particularly about, are you going to be communicating them without having signed off against the current marketing strategies, without having engaged with the commercial strategy and so on and so forth. Even the tone of letters and things like that, emails, whatever, those conversations you need support for and understanding for. That's a flashpoint internally. Just point that out.
Thank you. No, and I think as the sales guy on the call, I completely understand that concern and the commercial challenges it presents. We have a quick poll for our audience, which I know that we'll all be interested in. But for your last remediation exercises, we're really interested in how many of you supplemented your in-house staff with external expertise. So we'll keep this poll open for just another couple of seconds, as we have been running out of time slightly. And I close the poll and share this result with you. So pretty even split. So 45% of people today on the call have used external resource, but 55% haven't. And I'm sure Heather and Nitish should be delighted to talk to you about that in the future. We are beginning to get some really interesting questions come in as well. So I do want to make some time for that. And I may, as we walk through, make this maybe our final panel question. So we wanted to get your opinion on whether we'll ever see the end of remediation. One of the things we see often in compliance, and as compliance in particular has grown as a function within financial services over the past 25 years, we're beginning to see compliance, relationship management and ongoing management become part of it. So if that is going to continue to grow, do we think we'll ever see the end of remediation? Andrew, perhaps you'd like to answer that first.
I love this question, because so much of what we're talking about and so many of the solutions that we need to implement and think about going forward are based on tech, based, as my colleague here mentioned, based on our developing tools around machine learning or AI or whatever particular prism you put on it. It's all about the maths, it's all about the algorithms, it's all about, if you like, that very hard data side. But in actual fact, I think the answer to this question has its poetic side as well. which is to say that always when you're managing risk, besides the data-led approach, there is the smell test. And if you don't buy into that, then trust me, you've never worked in risk. You know, there are things which, whatever the data tells you at various points, an experienced person will say, I don't feel it. I'm not getting the comfort, the assurance that I need. Or conversely, I don't care what you tell me, something's not right. And having the courage to pursue that it means that you've got the right culture going on in the organization. So that's what I call the non-data side. And on that, I like to I like to think of it like this. I don't actually think we'll ever see an end of the requirements for remediation. But what I do think is that we can envisage a position where that might not be required. We have to think of that, as I say, almost poetically. We can envisage a situation where we have dynamic risks profiling of our counterparty relationships, driven through the adoption of the best practices and the best tools throughout the entire life cycle of the customer engagement, etc. And ultimately, they're feeding live data into systems, whether those are coming through an automated process or through a manual process, so that we always know what the score is. And that score can always trigger actions, either commercial actions or risk management actions. So that's the sort of the ultimate goal that we want. And I think it's well to have that in mind and make sure that the steps we take move towards that and not away from it. But realistically, I don't think we'll get there. But as I say, the poetic part is, as you know, Robert Browning said, a man's reach should exceed his grasp. And I think that's how we have to think about that. Failure is part of risk management. Materialization of risk is not necessarily evidence that the risk program is failing. It's all contextual. But we should have an idea of where we'd like to be and push ourselves towards it. And then we should have a tolerance for managed failure within that. So I guess that's my take on, will we see the end of remediation?
Heather, I'm keen to get your view on the question.
I agree with Andrew, to be honest, and like I'll keep it short because I know that we've got, you might have one more or we might wrap up, but really, in terms of the end of remediation, I mean, you're never going to see the end of remediation. You know, ongoing, constant changing landscape, even if there was, you know, well, I say even if there wasn't, the reason there's an ongoing change in the regulatory landscape is purely down to the fact that actually criminals keep getting smarter and they keep finding new ways, technology is growing, and there's always different things that we need to change as organisations to make sure that we stay one step ahead or at least try and keep up. So I'd say forever never see the end, also keeps me in a job. So
Nitish, do you have similar feelings?
Yeah, I mean, I agree that we don't see the end of remediation, at least not for the next decade. I think there are a lot of sandbox projects going on, a lot of tech sprints in the market. You know, we've got several new segments of the market open up. Crypto assets is one of them. But I think in general, I think market has gone through deep transformation in the last 5-7 years. Personal current accounts have exploded. I think given the market has continued to evolve and the regulatory technology standards have evolved, I think there's a lot that will happen in the AI machine learning world as new cases come up, and you know, all of this will take time for the machine learning algorithms to digest, and I think we've still got about a decade to go before we can address this question comprehensively.
Great, thank you. And I know in particular, I'm always interested in what the digital transformation and you know, the drive toward lean customer onboarding means for remediation. But I think I'm going to cut short the panel discussions with a couple of really interesting questions before we wrap up. So we have a question from Marwa, who's asking the panel, you know, how often should her organisation be planning a remediation exercise within financial services, and what are the key indicators that they should be looking for to tell whether a customer record should be remediated or not, and what sort of timescales do we think is kind of best practice for that? Heather, would you like to answer that question?
yeah, of course. So I don't necessarily think you should regularly have to plan for remediations. From a budgeting perspective, it might be something you might want to consider, but actually it's not something you necessarily regularly plan for. We'll see if the others disagree with that, but in terms of how would you identify it, generally always basically health checks against gap analysis against the regulations, legislations, or internal audit or risk assessment to say actually what are my current policies and procedures, do they adhere to regulatory guidance, but actually do we also agree to our policy, so testing and reviewing cases. So I think a regular check of what you're doing and a look back is always on a small sample basis is always what you need. I think some other key things other than this general file testing you might want to consider is actually like what's your turnover of staff who, when it comes to onboarding. So actually do you have a high turnover of staff? So actually really are they being trained properly? Like what are their quality results looking like? So actually do we think that they're doing the job they should be doing? Just basically generally making sure that actually your business is on track with actually what you believe it to be would be my key things.
Awesome, thank you. We have another question here. Maybe Nitish, you'd like to take this from Michael, which is, do you think the 6th Money Laundering Directive will affect how organisations conduct KYC remediation, in particular when it comes into effect this year?
I definitely think there's going to be a massive impact on the market with the new regulation coming through. Every company, more so every new company like a fintech, need to kind of do a business review of their and understand the maturity of their compliance process. Typically, we all know there are 3 lines of defense functions, and the effectiveness of that 3 line of defense function needs to be kind of evaluated on time-to-time basis. If it is not metric driven already, there is already a gap to be filled in. So the first question that any financial institution, or for that matter non-financial institution, should ask themselves is there a metric driven organization in the compliance area? If it's not, I think that's the first trigger. I think if there was an audit that was done at any point, the findings of that audit need to be kind of analyzed well, and because that is going to give you a litmus test of where we are, from a compliance maturity standpoint. And obviously, the upcoming regulations is going to have a massive impact.
Andrew, I'm keen obviously to get your view on a lot of the 6th Money Laundering Directive is pointed towards harmonisation across markets and the way enforcement is going to be enacted. Bearing that in mind, what do you think we are going to see? Are we going to see different behaviour from financial services organisations when they approach remediation because of the impact of the 6th Money Laundering Directive?
Yeah, actually, that reminds me of something that's happening in the Netherlands at the moment, where the major banks are coming together to define an approach. ING, ABN, and Rabobank are in the midst of working together theoretically to define an approach to, let's say, the entirety of counterparty risk management from a financial crime perspective. Personally, I'm interested to see how that will work out. I'm not loving the idea, I'm going to tell you. It seems to me to fly in the face of the principle, if you understand it properly, of the risk-based approach. It seems to me that to presume that the entities in question can have the same controls and that's effective is to presume that they have the same risks. I don't buy that. I think institutions have different risks based on their client targets. For example, in the Netherlands, Rabobank is known as the farmers' bank. I hope that's not considered pejorative in any sense, but what I mean is that it has a particular client profile, it's involved in certain products, it has a certain history. That's not even to talk about the differences in historical systems, tech, and those kinds of things. Or even when you talk about things like your footprint, what kind of languages your customer base and your employees have access to. So to come back to your point, I think there is this drive at one level for more industry alignment in terms of approaches. But actually, I'm not sure that will prove to be the most successful way forward. I think that a closer understanding of the risk-based approach and the ability to articulate and provide the appropriate rationale will always be the best approach for an individual organisation. Once you start thinking in terms of industries rather than companies, you fall into the traps that we've seen, for example, banks make before with de-risking. You cannot look at things with such a broad brush, and certainly expanding your idea of, say, your own institution by including other banks at the same level or whatever is a way of taking nuance out of the process. So that's an example of one of the things that's happening in response. I personally will be interested to see how it plays out. I'm not loving the idea at the moment. I'd like to see us focus more on the risk-based approach, understanding and improving that.
That's great. Thank you very much. I'm going to move to wrap up today's webinar now. So my thanks to Nitish, Heather and Andrew for your time today. It's always a sign that we get so many questions, B, we've had so many people engaged in the webinar to talk about the topic today. I know you're all passionate about it. Thank you for your time. Thank you, of course, to all the attendees. You will receive a copy of the recording of this webinar to your inbox very shortly. And if you do have any questions, I'm sure that Nitish, Heather and Andrew will be more than happy to answer them via LinkedIn, or you can get in touch with NorthRow and we'll be able to put you in contact with them. Thank you for your time.
Thank you.
Thank you. Afternoon.
Yes.